Add legal entity. IT private limited. Ledger. Chart of account. Corporation. Calendar. IT. Corporation. Standard approval. By Oracle. Adding a reporting currency. USD. Let's upload. So this all are okay. Click on next. Carefully review the subject. Okay. You check the review that you have correct legal entity attached and you are creating the details of reporting currency ledger and primary ledger. That's it. Click on finish. Confirmation that it is successfully completed. Define accounting options. Okay. So now we have to go to ledger options. Okay, got it. If you see this one, here I do not have the structure number generated. This is the program done yesterday. Okay, and the same program done today. So maybe after this, we may succeed on this setup. So now we have the next button. Okay, we will continue with this. We changed our ledger name as IT India Ledger INR. So we just update over here. Yeah. So it will not be forgot. Okay, now we complete this setup. Add legal entity. As I removed it before, I'm just adding it.
Sorry, volume is too low, sir.
Huh?
Volume is too low.
Oh, volume is too low.
Sir.
Now it is audible. Hello.
Same.
Yeah. Now,
Yeah, okay, sir.
okay. Okay. So I just added the legal entity on my accounting setup. Then I am going to complete my ledger options. Okay. See, you have this next button enabled, and these fields are fresh now. You cannot change over these fields. So, short name. Sure. Okay, everything is okay, but click on next. When you click on next, in the next page, you have some parameters to be entered. Year-end processing, you have to give the details for the retained earning accounts. Go here. Chart of accounts. 300. So here we have to give the company code, the created one C1, location CHN, function we add 000, default value 7600. This 331. Retained earning account. Then we need to add the intercompany default value. Future segment. Okay. Now I have given this criteria and I have to click search. It says that no code combinations available, no results found. You can click on create. This is the feature of dynamic insert, which we enabled at the chart of account structure level. I will show that option again to you. I searched this field and it given me there is nothing. I clicked on create, it is going to create. And this is the function of dynamic insert. Means you can anytime, if any code combination not available, you can very well create it. Okay. We have suspense account posting, rounding difference tracking account. Okay. And you have other details here. Enable intercompany balancing, enable journal approval process, enable journal entry text, and the reversal criteria. These all are optional field. When we start using the GL, we will keep on adding these details and then we'll see what the function it is going to happen. Suppose suspense account. Okay. If you enable suspense account posting, you must give here the suspense account. So if journal is not balanced, it will post the transaction using the suspense account. If you are not giving anything over here, or if you are not enabling, it means that the suspense account posting will not happen. The posting will itself error out. Rounding difference tracking. Sometimes what happens that with the currency conversions, it happens that whatever you are posting, there is some minimal values will be there, which is causing the imbalance between the journal debit credit. So at that time, what happens, the rounding difference account will taken up in the journal level automatically and it completes the journal. Intercompany balancing, when we have intercompany transactions, enable journal approval process, enable journal entry text. These all we cover later. Then we have the currency translation option. Period and reports, periods, average report, cumulative translation adjustment account. Translation option we use when we have the foreign currency and we have three types of conversion of a foreign currency amount to local currency will happen. First is the conversion. Conversion is happening at the time of transaction. Okay, suppose you are posting a US dollar 100 posting of a transaction, $100, and at that time the exchange rate between USD and INR is 75 rupees per dollar. Then it convert into 7,500 INR in the books. So this is called conversion during the time of the transaction. The next option is the revaluation. Revaluation is when there is account balances with the foreign currency at the end of every month end. Okay, because we are using monthly calendar. If we use weekly calendar, it is end of the weekly you have any balances in the foreign currency in any account, and that all is related to assets and liability account. Suppose you have one supplier who has $100 is the balance that will be converted into month end revaluation rate to show you the actual balance as on the month end. Suppose at the month end, let's say July 31st, the exchange rate between US dollar and INR is 74 rupees. But when you recorded the transaction, 75 rupees. So now you have to pay 74 rupees if you are going to clear this account on 31st of July. So it means that you have a gain of 1 rupee per dollar. It means that 100 rupees on that particular transaction. This is a no gain. This is an advantage. That's when you convert this just conversion and showing that you have 7,500 as a balance in your accounts after conversion during the transaction. And next, when you do the revaluation, it is 7,400. So $100 is 100 rupees is your gain for unrealized gain, because you have not cleared the balance of that account. You have just maintaining it in your system. It means that suppose you clear this balance on 31st of this July, then how much you have to pay? To know this figure only, you run the evaluation. And the last one is the translation. Translation you run when you want to report your complete trial balance to your parent entity who is in a different geography with a different currency. Suppose you are reporting into the France and you want to convert your all transactions in INR to euro. At that time, you will run the translation process. This translation will help you to report for the reporting figures for the consolidation purpose. So period end report will be used. Period end rate will be used for converting the balance sheet item. Period average rate will be used for you converting your profit and loss item, and cumulative translation adjustment. When you have that you are doing this translation, you have some differences will be coming. That difference will be tracked over translation adjustment account. So this feature we will see later when we start with the GL training. But for the time being, retained earning account is the mandatory. We will proceed further. Okay, this is going to end. Okay. Next is the advanced option, general level journal reconciliation. Now we are enabling it, and we will see how this journal reconciliation work. As I yesterday showed you, when we add qualifiers to our account value, there is a option called reconcile account, yes or no. So if you enable yes, you will be able to do the journal reconciliation. But at the ledger level, you have to enable this option to reconcile the journal. Then budgetary journal, if we are going to use the budgets, that is also we will enable at the later point of time. Average balance, this is nowhere nowadays used. It is very rare scenario. Okay, and but we will see this feature also at the time of consolidation. When we use the consolidation function in the GL module, we will enable this function and we'll go through it. Click on next. So now you have this verification and just finish this setup. So now you have completed one setup related to ledger options. Next is the reporting currency. Click on update pencil button. You already see here US dollar is already given as a function. When you return, okay, you have to update. This is reporting currency level details, reporting currency name, short name, USD, subledger level conversions, rounding difference tracking, enable journal approval. Okay, here it is asking for what is the exchange rate type. Okay, we have this many exchange rate. Okay, so we will use the corporate rate. This corporate rate is by default coming with this system. Others are you can create it. So right now I am using corporate rate, and at the time I will be defining the exchange rate between foreign currency to local currency using the exchange rate type corporate. Written transaction rate type. Transaction level, if you are using something different, then that will be tracked if you enable this yes. Okay. If conversion rate is missing, then report the error. And this is it. Okay. So we have this which category to category conversion, journal source and category conversion will happen. So most of the system journals coming from assets, receivable, cash management, cost management, inventory, budget, purchasing, all this will be said as no. But if you see other to other, yes, other to other is covering everything it is covering. So you can very well disable this as no, and you can just go for some specific modules only. So right now we are going with the other two other combination. Click on apply. The status is complete. Click on complete button. So this is the done. One more setup. Assign balancing segment value. Okay. If you have assigned balancing segment at this level, legal entity level, no need to do any assignment over here. because this level, the assignment of balancing segment value will just allow you to process some adjustment transactions, not the complete transactions. Right? So I'm just updating at the legal entity level. And here I no need to update any value. Because you see at the legal entity level assignment is there. You can very well skip this one and click on complete. The next option is operating unit intercompany account sequencing. Now operating unit. Okay. We have to add operating unit. Operating units are used to link the subledger with the ledger. Subledger is accounts payable, accounts receivable, cash management, fixed assets, cost management, all these different modules. To link the different modules with the our ledger, you need to assign the operating unit, and that will be done over here. And you can very well create in this what we say, you can very well create on the organization structure under the HRMS responsibility as well as inventory responsibility. So here right now I am doing with this IT operating unit ITPL business group. It is related to IT corporation. Default ledger context IT India ledger. For legal context, so IT private legal entity. Okay, so now you assign your operating unit to the ledger and to the legal entity. So there, this is called the linking of each organization to its higher level as well as the lower level. So what will happen? Your transaction will flow from one module to another module easily. So once I define this, I click apply and click on complete. And next is the intercompany. We will see this intercompany when we come here with the GL. Click on just complete and done. You can very well edit this in the next time. These are not just one-time setups. Most of the setups, what you have done, if it is a one-time, it is already grayed out. And if it is a recurring, you can add it very well next time. Sequencing. Sequencing also, I complete for the time being. Click on apply.